It is now Tuesday, December 10th, and nothing going on today of real note in the markets. I'm sure there's some things going out there that's not anything we're anticipating, just things will happen. They always do. And what we have tomorrow, though, is the CPI, so the Consumer Price Index, a big measure of inflation that everybody waits for, which is actually not the Fed's favorite measure of inflation. They like it, the Personal Consumption Expenditures Index, which is the PCE, and that is not going to come out till later this month. We have initial claims coming out on the 12th, as well as the Producer Price Index coming out. So these are the CPI, PPI, very, very, very big metrics when it comes to understanding what's happening with inflation. At least what they're trying to tell us is happening with inflation. We know they bullshitted us a lot with it. Then you've got the initial claims, jobless claims, the continuing jobless claims. We'll see how those continue to go because those have had some pretty heavy influence. But where does the market sit today? Where are we in comparison? Well, as we're rolling into this. So right here, doing a quick little screen share. If this will move along a little faster, it's running a little slow today. Technology is not my friend. At least not today, it ain't. So here we go. All right, so as you can see here, last time we chatted, we got up in here in this area. We had this strong barrier. We're heading towards it. We hit that barrier, came off of it. And of course, we have other barriers right above. So we have some pretty heavy levels. At least these are ones that I'm marking looking back on the charts. Are they stuff that other people mark? Might not. But there's things that I'm seeing as I look back in my charts that would tell me that these are levels that would be something that a trader might put in a sell or buy order somewhere in these points. So right here, it's also one of the moving averages hit there. We didn't quite reach it. And again, I might be off. My level might be right there. And then it did reach it. So if it's right there, it reached it, bounced off of it, came back to yesterday. We just pulled back and pulled back hard. So with us going down into the moving averages right here, so what do we have here? We got the 21, the 35, the 50, the 100, and the 200 all lurking below here. If it hits one of those, it could come off of that. That could be something that gives us a little bit of strength. And bounce back and forth here. But we also know we got this big heavy duty son bitch up there. This is going to be the rock that it's going to ever try to get to. And I think this is what's going to keep it from us seeing those lower interest rates other than what we had seen back here. So our lowest interest rates this year that we have noticed would have been right in here from September, let me see here, September 10th all the way till, we could actually say even close somewhere into 1st of October. So September, October, we had some pretty good rates, but all came off of that. And we played around in this range, which will continue to play around in this range for the foreseeable future that I can tell. So, and I moved this one. I got to go back and take a look and see where it is. That's what we've got. We'll see what CPI does for us as we're pushing down into this. So, we're not certain how it's going to work out. We got CPI, PPI, and continuing claims. And if they go kind of go the wrong direction, we have a long fall. And that's a pretty long, hard fall, and it could see interest rates jump up quite a bit. In fact, let's take a quick look at it again, just so we can see what could happen. I'm not saying it will, but right now we only have the moving averages right here. In my estimation, again, it's just Aaron Chapman talking, as barriers or at least support before we fall all the way down here. Now, how far of a drop is that? That drop looks to me, if it followed these patterns and hit that drop, that's 73 basis points. That means whatever the interest rate today could go up by a cost of 75 basis points, or say $750 for every $100,000 transaction. That's a pretty significant amount of a jump because that's what it did here. You see, when we came out of it here, fell below this, kept falling. See the pattern? And it kept going down here. We dropped in here. And if we continue to drop down into moving lines, I'm going to quit doing that. So ultimately, we know we got some risk below us. We've got definitely have some ceiling above us. Now it's time to keep those locks intact as far as I'm concerned. There's a lot above us that would stop us now. It doesn't mean we can't break through it. Doesn't mean it's not possible. There could be some news that comes out that gets the bond market all excited and throw money into the bonds. Hard to say. But I want to at least let you guys see what I'm seeing, and we'll just see how it all plays out over the next couple of days. Have a really, really good week.